Ms. Craw's lecture is titled Managing Risk the Nordstrom's Way. And after her remarks, we should have time for some questions and answers. So while she's giving her presentation, think of something that you might like to ask our practicing risk manager who's with us this evening. After the Q&A, we'll have a gift presentation for our speaker. Ladies and gentlemen, please join me in extending a warm Washington State welcome to the 2023 Walton Distinguished Lecturer, Teresa Craw.
Thank you, Mike. It is an honor to be here tonight and present to all of you. So thank you very much for having me, and thank you for attending on an evening. I know it's technically a school night, so I promise not to bore you all. I have very limited slides, and I only have 2 slides that have bullet points on them. I remember being a college student, 10, 15 years ago, sat through great presentations, and I've sat through some not great, so great presentations. So hopefully it'll be engaging and interesting, and like Mike mentioned, we'll have plenty of time for Q&A at the end. All right, so for today's outline, so I figure, of course, I'll talk a little bit about my background. Mike kind of gave you some of my educational professional history, and I'll go a little more in depth just because I think it is important, especially when you're in your early 20s, to see kind of what career path I took to get to the position that I'm at now. Then I'll go over a company overview. I'm sure most of you are familiar with Nordstrom, and if not, hopefully after this presentation, you'll become a customer of ours. And then we'll go into the role of risk management, how insurance plays a role within it, and then we'll go into specific exposures that our company has, and we'll end with Q&A. Oops. All right, so who am I? So this is basically my whole heart in one photo. So I am a fairly new mom. This is a picture of me, my husband, Dave, and our daughter, Charlotte. She's going to be 8 months old tomorrow. So definitely balancing the new parent life with having a young baby. It's wonderful. I'm born and raised in Seattle. You'll see in the next couple of slides my education, where I basically stayed in Seattle, never really moved out, and I'm still there. I grew up in Seattle. My parents are still there. I have 3 older brothers, so basically had to grow up strong and independent and, be part of the boys club. So all the women out there, you're doing a great job, and just keep doing what you're doing. One more picture one more slide. So of course, I think my daughter is the cutest thing in the world. So I mentioned her name is Charlotte, but she goes by Charlie for short. But I tell everyone Charlotte because everyone assumes that she's a boy, but she is a girl. And that is our little 3-year-old dachshund. Her name's Oakley. When I had my daughter, she was actually 3 times her size. And now that she's almost 8 months old, our dog is back to being the smallest one of the family. So she's got a big personality though. All right, so for the next few minutes, I thought I would talk a little bit about my background. It's not the traditional route that you would think that going into risk management. So like Mike mentioned earlier, I attended Seattle University, which is a fairly small private school in Seattle. I'm sure you've all probably been to Seattle. It's not as big as UW. I studied finance and criminal justice. Wasn't really sure necessarily what I wanted to do with my life, right? You get that question all the time when you're 18 or 19 years old. To this day, I still don't really know what I want to do with my life. So don't worry if you don't exactly have the career path that you think you should have at this time. You have all the time in the world to figure it out. When I was at Seattle U, I was fortunate enough to do 3 different internships and a variety of internships as well. So the summer after my sophomore year, I had my first, what I would consider a real job. Technically, throughout my college experience, I worked at our gym as well. Did more homework than I really did anything, so I don't count that as much. But I worked for the city of Lake Forest Park, which is also a small city outside of Seattle, about 5-10 minutes. And in that role, it was a perfect first job, right? I'm 20 years old, worked with the municipal court, worked with the tax department, with the controller, public works. It was kind of a great segue into learning about corporate America, how there are different divisions and different business units within companies, right? I think schools put a lot of emphasis on employers. Who are you going to work for? Where do you want to work? But truly, every employer kind of has different opportunities that you can work at, right? If you want to be in finance or you want to be in marketing, you can do that at any employer. I'll talk more about kind of values later. But so I did that over the summer. It was about a 3-month internship, and it was a great experience. I then did my junior year at CLU, and that summer I was lucky enough to do an internship at Boeing, again, also based in Seattle. And that was in financial planning and analysis in their FP&A group. That was also a great experience. Very, very large employer, right? Hundreds of thousands of employees, huge finance organization. So you got to see a lot of different aspects about the aerospace industry. But when I did that internship, I, at that point, had changed my majors at least half a dozen times. I started as a pre-law student. I eventually was an accounting student. I was a criminal justice student. I was a finance student. I changed it so many times, but I eventually landed on finance. So I did graduate with a finance degree. And that decision really was just following something that I'm okay at. So I'm decent, half decent at numbers. So sometimes you just go with your strengths. And that's kind of why I ended up majoring in finance. Finished my internship with Boeing, and I started my senior year of college. And at the same time, throughout my senior year, I interned with the DEA because I also had a passion and interest within the criminal justice side. That was part-time, 20 hours a week, my senior year. And I actually graduated school a little bit early, a couple quarters early. And I had the opportunity to intern a 4th time with Boeing, but I don't necessarily count it as during school. I kind of had to work it to my advantage where the last day of school started my internship, because to do an internship at Boeing, you must be a technical student at the time. When I was at the DEA, though, it was completely different than working at Boeing or working at the city. It's kind of a faster paced environment. I specifically supported the special intelligence group, which meant, I was improving my critical thinking skills. I was improving my analytical skills, working a lot with different data sets and how to slice and dice stuff to find ultimately what you're looking for to, move on to the next phase of whatever project you're working on. So as I mentioned, I graduated early, my senior year. And at the time, a lot of federal agencies don't have job openings the way larger employers do. So I didn't have a chance to, at the time, I thought I wanted to go into kind of federal government work, but there was not an opening at the time. So what did I do? Went back to Boeing because they offered me a job. So why not, right? You want to get paid. So I did technically my 4th internship with Boeing for about 6 months. And I supported the aircraft sales and contracts division, which was a really, really neat program. Basically, for customers, when they first buy an airplane, you would think maybe that next day you get an airplane, right? But if I'm Alaska Airlines and I buy an airplane today, I don't actually get that airplane for another 3-4 years. So what I was doing was the latter half of that process, when they're coming back to essentially pick up their airplane, they're going to test it, they're going to look at quality, they're going to make sure it's what they spent millions of dollars on, and then they'll take it home. So I was on that piece, that tail end of the process. From there, I moved into a different role within supplier management. So I became a procurement agent, a buyer for the company, specifically on the consulting and advisory side of Boeing. That's where I met my husband. Actually, we ended up hiring his consulting firm and he was on site, and 13 years later, here we are. So I was at Boeing for about 2 years in that role, and not to speak negative, I had a wonderful experience at Boeing. And if any of you have the opportunity to work there, it is a phenomenal employer with lots of opportunities. The role that I was in, though, I just kind of felt slightly bored. I felt a little bit like I kind of stagnated. It was a stagnant role. And when you're in your early 20s, it's probably not what you want in your career, right? If I was 50 years old, maybe. If I was 60 years old, maybe. So I wasn't sure what I wanted to do, right? That's kind of the recurring theme of my presentation. So I decided I'm going to take an educational leave of absence, an ELOA. And what that means is Boeing said, okay, cool, Teresa, you're going to go back to school. We still have a job for you when you're done with school. And that was kind of a safe bet versus straight up quitting a job, right? Now you have no options. So I went back to Seattle University to do my MBA full-time. And about halfway through that program, Nordstrom offered me a full-time position. So I ended up accepting that role and then saying, thank you, Boeing, but I've decided not to come back. So in that role, that was the risk management team, specifically to work in their analysis department as an analyst. And so for the last couple quarters that I was in school, I worked full-time downtown Seattle at Nordstrom, and then I drove to campus to go to school for 3 hours every night and got home around 8, 9 p.m. And it was pretty hard for a few months, right? But there's always a light at the end of the tunnel, right? I graduated, got my MBA, and fast forward now, I've been with the company about 9 years. I've held 5 different positions at Nordstrom, all within the risk management division. So before I go into risk management, I wanted to do, of course, a quick overview of Nordstrom. So I told you guys at the beginning, I'm not going to put up a bunch of slides. I'm not going to read a bunch of bullet points to you. So I did take notes, though. Figure I'd do some fun facts. So the top left, of course, you probably recognize it's the Space Needle, right? Seattle, Nordstrom's headquartered in Seattle. Our offices are in downtown, kind of right in the peak of where all the shopping area is. If you know the area, Pacific Place, a lot of retailers there. We were founded in 1901, like Mike mentioned earlier, by John W. Nordstrom, and we started as a shoe store, and it's been a family business ever since. Right, our president and CEO still has the last name of Nordstrom, and that really does show within the values. In 1971, we went public, and our stock ticker is JWN, if you know that, and that stands for John W. Nordstrom. A couple of years later, in 1973, we opened our very first Nordstrom Rack, and that location was actually in the basement of our flagship store in Seattle. The concept of it, though, was a clearance center. So basically, items that were in the Nordstrom store above ground, things that didn't sell, things that were going on sale, we just took it all down to the basement, and it was at the rack, so you can buy it for cheaper. And obviously, that business has boomed since the 70s. Few other fun facts. So the Little Fork, we have over 200 restaurants and e-bars. So you can get a snack, a smoothie, a coffee, or you can sit down for, a steak dinner sometimes. We have restaurants throughout our big Nordstrom stores, and then of course the e-bars. We are the largest tailor in all of North America. So that is one that a lot of people aren't familiar with. But if you think about it, it makes sense. We have physical stores kind of throughout the country. And within all of our Nordstrom stores, the large Nordstroms, we always have on-site tailors and alterations. So if you're like me and you're shorter, every pair of jeans I buy has to be hemmed like 6-7 inches, right? Nordstrom. You have got a dress for a special event, Nordstrom. And if you're a loyalty member, you also get alteration credits back on your card. So sometimes it's kind of free, depending on what it is. Nordstrom made products. We have over 10 brands that are essentially in-house private brands. So these are brands that are Nordstrom made. They're designed by Nordstrom employees, and they're in-house, and you might not know that they're Nordstrom made. So we have a brand, for example, 1901, that it does men's shoes, shirts, apparel. Again, that's a nod to the year we were founded in 1901. So all of that is designed in-house by Nordstrom employees. We have a really cool employee charitable match program. So we match up to $5,000 per employee at Nordstrom for volunteering, for giving back. So any organization that you're passionate about or you have interest in, if you give or donate to these organizations, Nordstrom will match that dollar for dollar up to $5,000. We also do the same equivalent thing for volunteering. So if you volunteer an hour, we will donate $15 for every hour you volunteer. And a lot of our employees take advantage of that because you get to, again, whatever you value, whatever organization, group that you have interests in, Nordstrom ends up supporting. And then the last fact, we have today over 350 locations. So that includes about 100 Nordstrom stores. We call them full line stores, the big ones. We have 248 Nordstrom racks, and we've opened about a dozen new racks this year already, with more coming on the latter half of this year. in addition to plans to expand the wrap business next year and in the near future as well. So we are definitely opening more and more stores throughout the next few years. And finally, the last icon, our number one goal, our number one priority is always the customer, right? We're customer service driven, we're customer experience driven. When you think of Nordstrom, I would hope that you would think of customer service being part of who we are. So just briefly to talk about values really quick. Like I said, customer obsessed. So, from a tiny shoe store, Nordstrom's grown into the leading fashion retailer, or a leading fashion retailer. We strive to know our customers better than anyone else. It's in our DNA. We're owners at heart, so we're approaching problems with curiosity. We're creating solutions. Everything that we unlock is going to be for the customer at the end of the day. Be curious and ever changing, right? Think continuous improvement, continuous change. Everything's fluid. Of course, we're also a public company, so we're here to win, right? We're going to deliver results today, tomorrow, into the future. And finally, we extend ourselves. So treat each other with respect, with kindness. There's a lot of policies, a lot of corporate companies, public companies. We have processes and policies in place. One of the neat things about Nordstrom is you'll see in a lot of our internal documents, the rule of thumb is always use good judgment. At the end of the day, are you doing something for the customer? Yes, use good judgment. You're good to go. So that's kind of how we operate. So today, Nordstrom has about $15 billion in net sales, and we employ about 60,000 employees across all of our stores and in our headquarters as well. At the top, you'll see customer experience again, right? Circling back, the customer is always at our priority. That's what we're looking at. So these company priorities are, if any of you were on the earnings call in August, raise your hand. No one called in, listened to earnings. It's okay, I never did either. If you did, this slide is taken straight out of earnings. So these are our 2023 company priorities. And the reason why I put it in there is because I wanted to make the point throughout the rest of the presentation, right? I'm not in real estate. I'm not opening up these new racks that we were talking about. I'm not a merchant. I'm not buying shoes or dresses for the stores, and I'm not working in our distribution centers, right? But the question is, how can risk management, how can insurance play a role within these company priorities? Maybe not directly buying the merchandise, and I'm not, packaging boxes at the fulfillment centers, but risk management has a role to play, and how it ties to these company priorities is what I want to talk through for the next maybe 20 minutes. So taking a step back, when you think of risk management and insurance, like if you had to close your eyes and think of insurance, like what pops into your head? So for me, when I was in my 20s, if somebody asked me, like, have you considered insurance as a career or an industry? I would think of a really outdated industry. I think a lot of paperwork, something that's kind of dull or boring, or all I think is like maybe Geico or, car insurance, if any of you own a car. I'm here to tell you that it's not dull. Every day is different. Every day is very, very different. You can deal with fires, whether they're literal fires or more philosophical fires. There's a lot of strategy involved and a lot of analysis involved with risk management. So I think traditionally insurance has had a really bad rap. I think, again, you think of, I'm sure Geico, actually, that was a really bad example. I'm sure Geico is a great employer, but oftentimes you think of kind of an outdated industry. I found this visual on Google. I did not make this, but when I saw it, I thought, it actually paints a pretty good reflection of what today's kind of more modern risk management is comprised of, right? There's a lot of, again, like I said, a lot of analysis, right? You're looking and identifying different exposures, different risks, and fast forward, you have to figure out, how am I going to respond to that risk, right? What am I going to do or not do? Am I going to insure it, or am I going to hedge and say, no, I'm going to self-insure this because I think I'm good with this risk specifically. At Nordstrom, the risk management team rolls up into our legal function. So my boss is the chief legal officer at Nordstrom. She's super smart, which is great to have somebody that's intelligent, who is big picture, visionary, and she knows, where the future of the company is and what kind of exposures we have currently and what exposures do we have down the line or could have. So within risk management, there's about 80 of us within the department. I'd say half of us are what I would consider traditional legal, so attorneys and paralegals. And then on the other half, we have kind of the traditional risk management. So we have claims adjusters or claims examiners, right? These are people that are managing claims day in and day out. And there's all kinds of different claims. There's finance, there's safety, there's business continuity, there's emergency management, think COVID, right? There's a lot of exposures out there, and that's all managed within the legal risk management umbrella. So, all right. So part of my role, of course, is managing the insurance portfolio. So what is risk management, right? How do we go about our days? So I look at risk management as kind of a continuous cycle. There's not really an end to the process because the idea is that everything's constantly evolving and changing. So you're going to have to adapt, and then you're going to have to see what your risk exposures are, right? So you identify your risk, whatever it is, whether it's cyber or property or liability, whatever it is, you have to know what's there to assess it and do your research and work with your underwriters, work with your insurers, work with your brokers, and then you eventually will respond to that risk. I think I mentioned it earlier. Self-insurance considerations are important. So we, along with a lot of other companies, I'm sure, we're not in the business of trading dollars for dollars, right? So what I mean by that is we're not here to buy $100 of insurance so that when something happens, an insurance company pays us $100 for it, right? That's kind of a waste of time for everybody involved. So self-insurance considerations basically mean, for a specific risk that you're looking at and you're assessing, does it make sense to buy insurance? Yes or no? Well, one, is there actually a solution? If there is, does it make sense to buy it? And if so, what kind of insurance are you buying, right? What kind of limits are you looking at? What kind of deductibles or retentions? So there's all these different aspects that you have to analyze, and it's all different based on the type of risk that you're assessing. And of course, again, you're reporting out, right? You're making recommendations, you're talking to leadership, you're monitoring it, and that cycle restarts. So maybe that risk you looked at 6 months ago, you've now gone through this process and it's been 8-9 months. You're re-looking at that same risk again because now it's changed and it's evolved. So how are you going to respond to that? So for the rest of the presentation, I thought we'd go through some specific risk exposures. So again, no big bullet point slides. So it's really just visuals that I'm going to put up, which is this. So the first thing you might not think of is marine cargo, right? So when I think of marine cargo, I just think of like a ship, and that's basically it, right? You have giant cargo containers. From my house, I can see like barges come through with the giant cargo containers on it. That's what I think of when I think of marine cargo. Why is it important for Nordstrom? So ultimately, we're a retailer, right? We're selling stuff, we're selling merchandise, and we cannot sell that if it's not literally here, right? Looping back to kind of our company priorities, right? Productive inventory. We can't have a productive inventory if shipments are delayed, if shipments have gone up in flames, if a ship has, gone down and gone under. We have to make sure that we are getting the stuff that we are buying to ensure our customers, you guys, are all getting what you are looking for, what you're buying at the time you expect to get it, right? If you're getting shipment for 3 days from now, I hope you get your shipment in front of your house in 3 days. So to give you an example of why marine cargo is important, real life example for Nordstrom. So a few years ago, there was a fire in Asia. So Nordstrom is a US company. Actually, just to go on a quick tangent, we used to have operations in Canada. You probably saw it in the news. We shut down the Canadian operations this summer. So as of today, we are just a US based retailer. But there was a fire in Asia. So it's at what we call a container freight station, a CFS. It's not a Nordstrom property. It's not land we own. It's not a building we own. But it's a location where they can bring cargo for a lot of their different clients, Nordstrom being one of their clients. And there was a fire there. And ultimately, we had a lot of stuff, right? We had a lot of merchandise that essentially got destroyed in that fire. And you might think, okay, well, that sucks, right? It got destroyed in this random facility, thousands and thousands of miles across the ocean over there. How does that impact us? Well, one, we didn't get our inventory right, definitely not on time. We're now missing all this stuff again. And now we have buyers that are going to have to figure out, can we pull inventory from different locations to fill that void, or do we need to buy more product, right, to get this stuff over? The reason why I'm bringing this up is because the contract that we have was important, right? The terms and the conditions and the language within specific agreements is what is important in this situation. So we had FOB Incoterms, and Incoterms basically determine who owns what and at what time. And with the terms that we had, basically when that product hit that location, it changed hands over to Nordstrom. So even though we didn't have a Nordstrom employee physically in that location, once it transferred over to our freight forwarder who's physically there, it became Nordstrom property. So full circle, what happened? Our marine cargo policy triggered, right? And so if you didn't realize we had a marine cargo policy, you might not think we have any kind of coverage, right? Again, this is on a different continent, far away, not at a Nordstrom location. But we do. And you look at your policy, every policy has nuances, right? Every policy is going to be different, but based on the terms that we had in the contract for that specific location, for that specific forwarder, it was Nordstrom's property. And so our policy triggered and covered the entire loss. And it wasn't chump change. So the moral of that story is essentially you want to know, of course, your insurance policy. You want to know your terms, but also as important is looking at your vendor contracts, your third-party supplier agreements. All of those are important as well, because if the terms weren't as advantageous in those, we wouldn't have had coverage, even though we had this policy in place. So the next exposure, cargo kind of segues nicely into property. As a retailer, it's not surprising, right, that property is probably one of our largest exposures in terms of dollars. We have stores literally across the country. We have 10 distribution centers and fulfillment centers around the country as well. And our stores are some of our largest assets. So property insurance is critical in case of a loss. When you think of property insurance, though, you might just think like homeowners insurance, right? Like your home. So you've got the shell of your building. So of course we've got our physical stores, the roof, the walls, the floors, but we also have everything inside, right? The real property. So all the clothes we sell, all of the shoes, even the displays or the fixtures, the mannequins, artwork on the wall, all those things are property. So Nordstrom owns it. If there is a loss, that's the stuff that's going to be covered. One of the company priorities from the earlier slides is optimizing our supply chain capabilities, right? Imagine if one of our distribution centers went down because there was a fire. If a fire took place and say we had to shut down our operations, what's that downstream impact? It's the customers, right? So ultimately, if a distribution center is closed, say for a week, 2 weeks, where are the shipments going to come from now, right? So we got to look at other facilities. Can you reroute a lot of those online orders? Or now is it going to take 2 weeks for, customer John to get his item that he ordered that was going to come from a distribution center that's now down because there was a fire or whatever exposure there is. The same thing with our stores. So in 2017, there was a deadly Category 5 hurricane in the Caribbean, and that impacted actually one of our stores at the time, along with a lot of other retailers and non-retailers. But that store was impacted by the hurricane, and it ended up being a complete loss, a total loss. That means what I said earlier, right? Everything inside that building was gone ultimately. And so that's where property insurance comes to play. And how do you calculate your property, the coverage, right? You're going to have to look at all of that all that valuation within the building, the physical building itself, any tenant improvements, any fixtures, equipment. In that example, we had a lot of art, shockingly, right? If you next time you go into a store, it could be any store, look around you, right? Are there things on the wall, things on the ceilings, like that's all expensive stuff too. So there's a lot of calculations and valuations that go into it. And that ultimately is what then is hopefully all covered within your property policy. And then some of the other things that you might not think of, but think of all the extra help that you need, right? So this store, in the example that I'm talking about, it was not easy to get to that store, right? When there's a large devastation, a large catastrophe, sometimes access to that location is hard. So you hire consultants, you hire remediation companies to support you, you hire forensic accountants, you bring in, a big group of people to support you with the process. And those are what we call extra expenses, right? Those are things that would also be covered within your policy. That's not technically property itself. Sorry, that took a little. All right, so the next exposure, crime policy. So I hope you guys like the icons. It took me a while to figure out which icons to put on. But when you think of Nordstrom, you might think of high-end luxury stuff, designer handbags, designer shoes. And we sell less designer things as well, of course. But why is crime insurance important, right? Today's world's a little bit different than maybe 10 years ago. Crime seems to be a little bit more important. It's a lot more on the news. But people say cash is king. In today's world, almost everything's electronic, right? Your banking's electronic. You pay with your credit card and your debit card. A lot of companies utilize ACH, right? So we wire payments. Like we're not really cutting physical checks anymore. That's not quite as common as it was maybe a decade or two ago. And crime insurance is important because, of course, it covers us for potential gaps with other lines of coverages. And why is this an exposure we have? Well, of course, we have a lot of dollars moving around, specifically digital. And there's a lot of bad people, groups out there, right, that are always trying to steal, just in general, right? You can look at that from any aspect that you want, but crime coverage can support things like impersonation fraud, social engineering, right? So imagine if our accounts payable team, right, the team that is cutting checks or cutting payments to our merchandisers, our vendors, our Nikes, our Adidas, what happens if, say, one of them are hacked and say they send you instructions to update your banking or your accounting information, right? And if it looks legit, how are we supposed to know that it's fraudulent, right? There are all these kinds of examples where that's the type of thing that crime insurance would protect against, right? Because we're not doing it intentionally. If we don't know someone's being a fraudster or being a bad actor, we're doing everything following our protocols, following our processes. Crime insurance is there to back you up ultimately. And we're here to win. Again, one of the values, right? We're not in the business of just giving away things. We're not giving away merchandise. We're not giving away money. So. All right. So the last exposure I wanted to talk about is general liability insurance. So what is general liability? I think some of the other exposures might be a little more intuitive, right? Crime insurance, think criminals, cargo on a ship, property, our buildings. So general liability, it's almost like slightly kind of like a catch-all. So general liability is a third-party liability. So what that means is that it protects us against others, right? So not Nordstrom property, not bodily injury to Nordstrom, but bodily injury to potential customers or to just others, just non-Nordstrom. Hopefully you guys again are Nordstrom customers, and if not, maybe in the future. But this policy is important because it kind of serves you guys. It serves customers. So a few examples: the banana slip and falls. So this is an extremely common exposure, specifically for retailers. You've probably seen like caution floors wet signs before when you go to any location. I guess it doesn't even need to be a store. That's a real exposure that Nordstrom has, along with a lot of other clients, right? You're in the store, there could be a freshly mopped floor, or there could be an uneven surface with a staircase, right? General liability will help us cover incidences like that, right? Whether it's paying for medical bills because you fell and, like broke your hip in our store, for example, or you were going up an escalator and tripped because it was uneven, and that's our fault if the escalator is not even. And then the plate. So I mentioned we have over 200 restaurants. Another common exposure, which you might not think of for Nordstrom, for a retailer, is food poisoning. So if you've ever eaten our stores, knock on wood, hopefully you've never been sick from eating anything at Nordstrom, but if you happened to have the fish maybe or shrimp or something like that, and you were unsettled, general liability. So it really covers a wide range of things. Safety pin. So this is funny. So I promise this is a real story. When I was putting this dress on, I realized, and this is not new, by the way. So I've worn this for at least the last 4 or 5 years. So it's slightly embarrassing. But when I was putting this on, I realized I had a safety pin still like right on the side of this dress that essentially has the tag on it. Clearly, nobody saw it, or somebody just never said anything to me every time I've worn this. But so I took it off and I thought about it because I had the icon in my presentation. But that's also a very common issue that we have had, right, from an exposure standpoint. So have you ever bought anything and there's a pin that's unlatched? Fortunately, mine was not unlatched, so I didn't get injured. But you can get pricked, right? That's not great. There's a lot of like anti-theft sensor pins as well. Sometimes those come apart, and it can cause actually quite a bit of injury if you're really getting nicked by it. So general liability, again, these are just kind of the more common exposures that we have, but it covers a wide range of exposures. So the final slide, so this isn't necessarily a risk exposure, but because it's kind of the other half of my role, I had to bring it up. So does anyone know what the bottom visual is? That's a non-icon. Just shout it out if you know what it is. Of course, the industry expert knows it. Okay, so it's a lost triangle. So I actually, when I was putting this together, I thought I was just going to put up an icon of a triangle, but then that kind of looked dumb the way I had the slides. But it's a lost triangle. And what that is, has anyone heard of actuarials? Is anyone an actuarial student, maybe? Or I don't actually know if there's actuarial courses here, but risk finance is a very specialized type of finance. So half of my team manages more of like the insurance portfolio side of the house, and then half of my team manages the finance side of it. And this is super neat because when I think of risk finance, it's essentially looking into the future, sort of. So if you're an accounting student, which I assume there are accounting students in here, you're kind of looking backwards, right? You're looking at things that have already happened. You're reviewing last month's financials. You're looking at last quarter and what's going on there. But with risk finance, you're looking future. So we're essentially trying to predict what will happen based on the development that we've already had happened. So to put it more in an example that makes sense, right? You could have a customer or an employee, say, slip and fall, or an employee who's walking up a ladder to grab a pair of shoes for you as a customer, and they fall and they tweak their ankle falling from the ladder. Okay, so they tweak their ankle, but they're okay. Maybe a couple of weeks later, it's still hurting, and now they're going to go to a doctor. Realize maybe it's more serious than they think. They file a workers' compensation claim. Workers' compensation is essentially coverage for employee injuries at the workplace. But let's just say 6 months down the line, it's still not great. Now they have to get a surgery. And 3 months after that, they get an infection from the surgery. And a year later, they have another surgery, right? So there's all these what ifs, and you don't know what's actually going to happen from that one fall from this ladder. So in risk finance, we're essentially a mini actuary within Nordstrom. And what that means is we're looking at all the claims that we've looked at, hundreds and hundreds and thousands of claims over years and years and years. And we slice and dice that, right? To say, was this at a Nordstrom, or was this at a rack, or was this at a distribution center, right? And was this in California? Was this in the Pacific Northwest? Was this in New York? So there's all these different parameters that we look at. And then using basically, if we're looking at workers' comp as an example, how many hours employees are working, or if you're looking at customers, right, square footage of our locations is a metric that we look at. The bigger your stores, maybe the more customers you have. Again, there's a lot of moving pieces, but ultimately what we're saying is from one potential incident that may not have even happened yet, but how much do we think the life cycle of that incident is going to cost Nordstrom? And we do that with claims that have already existed. So 2 years ago, we could have had that example happen, right? Someone could have fallen and hurt their ankle, but that claim could still be open. So how much does that already cost us? And how much is it going to cost us in the future? And looking at all of our past history and everything up until today, right? I'm working on right now, projecting what is everything going to cost for the next fiscal year. So now we're going to say, based on everything that's already happened, all the data that we have, what do we think is going to happen next year, right? You'd love to say nothing, right? You'd love to say there's zero cost, or we don't need to book anything, but that's not the realistic. That's not realistic at all. You know, there's going to be incidences in the future, and risk finance and actuarials is that way of projecting into the future and looking into the future. So if that's at all interesting to you, I encourage you to look into it, especially accounting students, because pro tip, actuaries are very specialized, which means they traditionally will make more money than traditional accountants. So think of it that way. And my final slide, it's the only other bullet point slide. So I told you guys about my background, had a lot of different interests, didn't know what risk management was when I was 20, 21, 22. So explore all your interests, right? Be open-minded, change your major, do whatever you guys got to do to follow kind of what you're interested in. Personally, I've found that internships have been super beneficial to me to help me figure out what I want to look at and things that I don't want to necessarily go towards. Find yourself a mentor. Sounds like there was a mentor program that's coming up soon. I hope you guys all attend that, because mentorship really can help you with networking, with providing opportunities, with just having somebody to give you advice when you have a question on career pathing. And one of our Nordstrom values, be ever curious, ask questions, right? I asked a ton of questions when I started at Nordstrom, and I think a lot of that curiosity is what kind of helps you learn, right? I actually forgot to mention earlier during my educational slide thing, I did a one-year program at the UW, didn't have the chance to come to Wazoo, my apologies, but I did a one-year program at UW to get my project management certificate. Did I want to be necessarily a project manager? No, not really, but it's a skill I didn't have, so why not continue to learn, grow, get out of your comfort zone? So if you have the opportunity to continue your education, whether or not it's a formal program, take advantage of it, because the more skills you build now, the more employable you are once you graduate, or 3 years down the line, or if you want to change careers. And of course, because this is a risk management insurance presentation, consider a career in risk management. Truthfully, at your age, I had no idea what risk management was. It wasn't really on the radar. We didn't have programs. I don't think we still at all have programs for risk management, but it's not the industry that it was in the media. It's not the stereotype that you see. It's fun. You meet other people, you surround yourselves with a lot of intelligent people who are driven, who, want to make change. Exposures and risks are fluid. So everything's evolving. There's always going to be new risks to look at. And the career path has tons of opportunities to grow as well, whether you want to be a claims person and adjust stuff, or you want to be on the finance side or the accounting side, right? Or you want to be more on the paralegal side, right? There's all these opportunities within risk management, and I encourage you all to consider it. And with that, I will open it up for Q&A. Thank you.
So it's my understanding that we'll require a microphone. So when questions are asked for this to come through on the recording, we have a couple microphones, and I'll give one to Angie. And there's a Nordstrom's value to ask questions, I noticed. So hopefully you guys are inquisitive. Anyone have a question for our risk manager?
As you see the world of retail crime evolving, do you see that also showing up in insurance policies for things like internal theft, shrinkage, that kind of thing? Or are criminal things more of like the things you were talking about with accounts and cyber?
It's a good question. It's a little of both, actually. So I think I alluded to it at the beginning, but crime insurance actually oftentimes has overlapped with property insurance. So when I think, well, as you said, right, crime has kind of evolved in the last 3 years, I would say. We, in our property policy, we used to have coverage for what's called strikes, riots, and civil commotion, right? SRCC. And in 2020, there were a lot of nationwide riots, right, that occurred that hit all of the mainstream news outlets. Nordstrom was not immune to that, right? We had riots and looters within our stores. The industry, though, has kind of evolved from that, right? That hit not just Nordstrom, it hit a lot of companies and clients. So think as an insurer, as a property carrier, the impact on you, right? Because now you're insuring the Nordstroms, you're insuring the Macy's and everyone else. So part of the evolution there is that a lot of property insurers then decided, well, this is a huge exposure that we have on our books, so we're going to pull out strikes, riots, and civil commotion, and it can be offered as a standalone policy. It's a different coverage you could buy. On the crime side, there's technically coverage for property. It's similar, right? So if you had a bunch of your inventory, let's just say like designer handbags, right? Because that's worth more. A lot of that is stolen. That technically can still be covered under your crime insurance, but it can also still technically be covered under your property insurance. So it depends on what the situation is, right? The unique situation. And like I said earlier, every policy is going to be different. So whether or not it's crime or property, it's going to be very, very unique to the policy that you have as the client. So our crime policy could be vastly different from another retailer who has crime policy by the same insurer. It could still be different. But we're doing things to try and alleviate that exposure, right? Again, at the end of the day, if somebody's going to try and break in and steal something, maybe we can't deter them completely, but we can fortify our doors, we can fortify our windows and our glass, we can have more police presence, we can have more security guards, we can have essentially, and when I say we can have, it means these are things we have done, but like specific cable locks, right? If you've walked into a high-end retailer, you can see sometimes shoes or purses are kind of locked down with traditional cables that are meant for merchandise. We have in some locations upped that. So they're essentially like bike cables, right? Again, if you're a sophisticated thief, you could come in with like giant cable cutters or whatever. And can we stop you from breaking that cable? Probably not, but maybe it's going to take you 3 minutes instead of 3 seconds. So maybe now you're not as encouraged or determined to come and break that cable. So there's all these different things that we're trying to do to mitigate that risk, in addition to covering ourselves with insurance policies and coverages.
Hi, sorry, I'm in the middle. Does companies, two separate questions.
Yeah.
Does Nordstrom's cover students or graduate students who want to continue their academics? Do they cover MBA? And if not, what would be like, how much student loan debt do you think a student should go into if they're working like two jobs like yourself?
So unfortunately, the answer is no. We do not reimburse for tuition. When I talked about doing my project management certificate, I actually had done that when I was still with Boeing, who at the time was doing tuition reimbursement. So luckily for me at the time, I didn't have to pay for any tuition. You still have to, of course, do the work, and you're still going to school and doing all the homework and stuff. But I'm sorry, what was your second question?
Two other companies, like does Amazon or Boeing still to this day,
You would have to double check me, but I believe Boeing still has an allotted tuition reimbursement program. It's not as good as it was 15 years ago, where they would pay completely for your MBA program, but I think they have, it's something like $10,000 a year you can utilize towards education, and it would be reimbursed. I just don't know what that number is. And I'm not sure about Amazon either. But those are great questions you should ask potential employers, because if education and further education is important to you, if you can find somebody that's going to provide that benefit, it'd be great. I would still say Nordstrom's a great company to work for too. So.
So how has the rise of blatant theft in major cities affected Nordstrom's relationships with the local governments of these cities, and how do you kind of navigate those relationships?
Great question. So similar to the first question. So in addition to everything that we are trying to do to mitigate what we can as the employer, as the retailer in the storefront, we do have relationships with specific cities and jurisdictions, right? We have our asset protection AP team, our leadership teams that are in work. I'm forgetting the acronyms, but they're basically in retail association groups where they meet with the mayor or the city or other policymakers to essentially voice our issues and our concerns along with other retailers, and work with the city and the jurisdictions to come up with solutions that are going to help us and benefit the city, not just retailers, but it's really the metropolitan cities, right? Everyone gets impacted by it, whether you're a restaurant or a cafe or a retailer. We're in all these organizations. Our flagship store in Seattle, right? Our leadership is also meeting with the city, with policymakers within downtown Seattle, with RELA, with retail associations to hopefully long-term figure out a solution that's going to benefit everyone involved.
This has more to do with your experience, but are there certain elements that you weren't expecting or surprised you within the insurance industry when you first started as a risk manager?
Did I find anything surprising? Yes. I think I mentioned, right? So risk management it's not boring, that's for sure. Thinking 2020, we had COVID, right? We had the pandemic, shut down our stores. There was a lot of work behind the scenes to figure out, is there coverage behind, we didn't really talk about it today, but business interruption, which is essentially lost sales because XYZ reason your store was shut down, right? Whether it's a fire or a pandemic or whatever it is. So are there coverages because of COVID? There was also a physical fire at the same time. And then, of course, we had riots throughout the year. So I think when I first stepped into my role, it was early 2020. All of this happened kind of all at the same time. So it's not just I use fire, but it's not just one fire that you're dealing with. It's multiple fires, right? And that's just that was just the property line, if you think about it, right? Is there business interruption from a property standpoint? If there's a physical fire, that's property. And then when there's rioting, that's property. That's in addition to the other 24 coverages that you're working on, right? And in my role at the time, I also had kind of a newer team. I had hired a couple new people. So kind of onboarding was also a new thing when everyone's virtual. So I would say since 2020, you had to learn to adapt. You had to learn to be flexible. You had to know that change was kind of ever evolving, and there was always going to be something new every day. And it's been a good experience.
So I was wondering if Nordstrom has in particular used any predictive analytics software or machine learning models applied to risk management. And if not, do you see Nordstrom applying that in the future?
So not specifically in risk management, not that I know of right now. So for risk management specifically, we utilize what's called a RIMIS system, a risk management information system, right? Which is essentially our claims system. So we are actually in the process of transitioning out of one that we've been in for decades into a more modernized version of one. And this newer version, which will hopefully go live early next year, will provide a lot of that on the analytics that we're looking for that we currently don't have access to, or it's much more manual. From an AI perspective, though, Nordstrom has, it's newer and it's always changing and evolving, but there are things that we are utilizing AI for, and that's more things on the customer side. So think style boards, and when one of our stylists want to curate something for one of their shoppers, they're using machine learning to help drive those customizations that previously may have taken 3, 4, 5, 6 times to build manually. Whereas now you can use a lot of that data and customize it within seconds. So there are things like that where it's more on our on the customer facing side, not so much on the risk management side right now.
My question was, to somebody looking to pursue a career within financial risk management, how necessary is the complement of a background in actuarial data analytics, given the way the industry is changing?
Well, I had no actuarial background, so I'll tell you that, and I do actuarials now. Would it help? Of course. I don't think that's negative to not have the background. Again, actuarials, I would kind of compare it closely to accounting. So do you happen to be an accounting student?
Yeah, finance and accounting.
Perfect. So, right, you're good with numbers. You know how to use Excel, right? You're analytical. I hope all these things are true. And so these are kind of the things that you're going to utilize if you want to become an actuary, right? And there's a lot of big broker companies. There's a lot of boutique actuarial firms. There's so many companies out there that employ actuaries. You just might not have ever thought to look into actuaries or actuarial career choice, but it's out there. And if it's at all interesting to you, right? More future looking, more projecting, more forecasting type work versus accounting. Not to bash accounting. At one point, I was an accounting student. So it's the skill set. That's what's going to transfer. You can be an accountant. You can be a finance manager or a finance analyst. Those are the skills that are going to transfer over. Absolutely.
We've seen the frequency and the severity of claims go up. How has the board and senior leadership, what have they requested of you here over the past couple of years?
So I'm very fortunate enough to be part of some of the team members that put together decks that go to our board. They get a lot of materials though. I don't think I mentioned it. It was in my notes and I kind of forgot. So Nordstrom is kind of unique, actually. We are self-insured and self-administered for a lot of our programs and our exposures. And what that means is that we manage a lot of our exposures in-house. So a lot of our peers and competitors sometimes will use, they will outsource that. Ultimately, they're called third-party administrators, a TPA, right? So you can go, if I'm a retailer X, I can say, hey, I'm not going to have all these employees at my company. I'm going to outsource this out to this TPA. And if an employee gets injured or a customer gets injured, that TPA is going to kind of manage that and support it and do all the claim work as well as the financial work. At Nordstrom, we have the opposite philosophy. So thinking about, again, the customer, right? The customer service, whether it's physical customers in our store or customers being employees, right? We manage that in-house. So we administer those in-house. So if there is an employee that falls off that ladder, right? They're going to be talking to one of my colleagues in Seattle, probably, or one of the colleagues in California. We have 2 offices. Because of that, we have looked at potentially utilizing more TPA services in general. And every time we've done like analytical studies and scenarios, we are doing it well. We're self-administering, and we're self-administering to save money to Nordstrom, right? We're actually doing it much better than we think outsourcing it can do. So when we're looking at our claims development, we're looking at our claims frequency, I would not necessarily say that they are all trending up at all. We have a very robust risk management team. Like I said, we've got tons of our adjusters in-house, and we use good judgment to make sure we're following the right protocols that we believe in. And month after month, quarter after quarter, we're looking at our frequency. We're looking at indemnity frequency, or from a workers' comp perspective, our employees off of work for an extended period of time. Same with customers. You look at the loss development. Are we closing those claims at a shorter period of time? And is that severity high? We balance that out, right? We're looking at all that data, and I wouldn't say that any of that is necessarily going up at a high trend.
Hi. My question sort of got answered, but what are some of the risks that Nordstrom chooses to self-insure?
That we choose to self-insure. The big example, actually, which might be surprising, is earthquake. So the example I gave during the property portion, so if a hurricane, or there's an impact from a hurricane, we've got coverage. Again, everything is very specific to every situation, but earthquake is an exposure that we have along with basically the entire country. More locations, regions are higher exposure, but we've looked at earthquake multiple times. You know, we're assessing that risk, right? And we're looking at it differently and looking at the data differently. But at the end of the day, the decision up until today is that we're going to self-insure earthquake, right? And it could come as a shock, because if there is an earthquake, that's probably going to be a large loss, right? But earthquake insurance it's expensive. It's very, very, very expensive. And we believe, using self-insurance considerations, that if the time comes and there is an earthquake that impacts one or more of our locations, we have a very strong balance sheet. So if there is a loss, we'll pay for it. And that's kind of the stance that we've taken for that exposure. And there's a few others, but that's kind of the biggest exposure that a lot of people would be surprised about.
Thank you, Teresa. Very good. Yeah. So we have some special gifts for our speaker this evening. I'd like to ask Mike Rask. Mike is the president of our Risk Management and Insurance Advisory Board to come forward. And Mike will be the MC of the program tomorrow evening. So Mike has a special presentation for you.
I'm gonna make you a Coug today.
Great.
Sure. So
Thank you.
we've got the Coug sweatshirt, the Cougar Gold, and a great plaque to say thank you.
Thank you so much. Thank you. Oh,
Yeah. Ladies and gentlemen, a round of applause for us.
thank you, Nick. It was an honor.
And just one other item of business to take care of. I want to thank the Office of Technology at the Carson College of Business for their assistance with the card scanner and setting things up this evening. I'd like to recognize Angie Center. Angie is the college event planner, and she was instrumental in setting up this event this evening. Sue McMurray, who is our college communications director, she handled the publicity for this event. And also the Compton Union staff was very accommodating, setting up the room and assisting us this evening. This truly was a team effort tonight. Students, hope to see you tomorrow, 5 p.m., Todd 125, Insurance Industry Night. After the program, you'll have an opportunity to interact with the industry professionals, great networking event. And again, amplifier credits are available. So with that, we are adjourned this evening.